profit at 8,151 crores, so which is slightly higher than the street estimates. 8,053 crores. Is it 8,053? No, it's 8,151 crore. We'll correct that. 8,151 crore versus 8,022 crore is the net profit. We are looking at standalone net profit. So that's the number to watch out for. Yes, 8,151 crore versus CNBC TV 18 poll of 8,000 crores is what we have on Reliance Industries. Let me now look at the performance of various businesses in terms of petchem and refining. Petchem has come in at 3454 crore and refining has come in at 6262 crore. Refining is below estimates. Petchem is also below estimates. So actually these numbers on face of it are actually slightly below street estimates. You'll have to say that. So what's leading to this number? Is it other income? Let us just see that as well, because that was the other major factor as far as last quarter's numbers were concerned. The other income, let me look at that number as well, is at 1,371 crores. So I don't know. I mean, it's a bit bizarre, the numbers. I have Prakash Diwan with me. Tax expenses come down actually quite a bit, 1,600 crores. So overall taxation is down quarter on quarter from 24 crores to 1,600 crores. It's quite a bit of cut in tax number, and that actually explains this number. So suffice to say, prima facie, what you'll say is that these numbers are a slight miss on estimates. We have SP Tulsian and Prakash Diwan with us now. Ms. Tulsian, have you looked at the numbers? Your first thoughts?
Anuj, if I take the petchem EBIT margin, because I'm not going too much on the top line, because I don't think that there is need to talk too much on the top line. The petchem EBIT at, again, I'm referring all these consolidated numbers, because I don't think that standalone numbers are very relevant, because if you see in the standalone, the overseas upstream losses are not seen getting booked in, interest expenses are not seen getting fully booked in. So I'm taking the consolidated number. Petchem EBIT is at 3,441 crore against 3,301 crore of the on a QOQ basis. So I would say that I'm not disappointed. Petchem has shown a good numbers, because it was expected that there is the margins has expanded on the polymer and polyester both. That is number one. Number two, if you go by the refinery, I have not been able to see the GRM, but refinery again has shown EBIT of 6,294 crore against 6,194 crores. And if you see in the background, the Singapore benchmark has reduced from $6.7 to $6.4 on a QOQ basis. And if you see the rupee having strengthened, probably it was expected that it will bring down the GMR maybe by 10 cents, $0.1. So maybe I was expecting GRM to be at $10.6 against 10.8 of the previous quarter. So in that background, again, I would say that refinery is not a disappointment on the EBIT front at 6,294 crore. Come on the upstream oil and gas, minus 486 crore. Again, a very big disappointment, and probably again the US shale gas operations may not have, or may have posted these big losses. But again, which constitutes a very small portion. Organized retail at 243 crores. EBIT again has disappointed, because on the QOQ basis you had 231 crore. So maybe, but again, I won't be taking this as a too relevant. Coming on the other income, 175. So what my point is that PBIT, I'm referring now on the core operations. I'm just trying to explain all the numbers. On the core operations, the profit before interest and tax is at 9,667 crore against 9,503 crore on a QOQ basis. So no complaint, there has been an increase of about 150 crore, but the shock lies below this. Now come on the interest expenses, company has shown interest expenses of only 556 crore in this quarter against 1,209 crore on the QOQ basis. Unable to understand how there can be a drop of about 650 crore in the interest expenses. Apart from that, there has been interest income also has fallen from 704 crore to 403 crore. So there is reduction in interest expenses by about 650 crore, and there is reduction in interest expenses by about 300 crore. So they have saved interest expenses of about 350 crore on net basis. And because of this, profit before tax has been at 10,254 crore against 10,213 crore on a QOQ basis. So if you want to take on the core operations, I think there are quite a positive on the core operations on petchem as well as on refining. Number one. Number two, on the net basis, if you take PBT level, it's a flat number, 10,250 crore. As I've explained, that largely because of the interest expenses, savings of about 550 crore. Provision for taxes have already seen having reduced at 1795 crore. So profit after tax is 8053 crore against 7,500 crore of the QOQ basis. So whatever you
gross refining margin, Mr. Tulsian, gross refining margin $11.5 per barrel, which is a big beat actually, $11.5.
Anuj, this is a very big beat, I would say, and I don't think that any analyst has expected this kind of, because if you, as I said, drop of 30 cents in the Singapore benchmark on QOQ basis, because we always correlate the GRM of Reliance Industries along with this one, number one. Number two, if you see the rupee strengthen, probably that has, lowered their GRM. But yes, the one advantage which can go in favor of the company is that there has been increase by about 7% on crude. So if the company were holding very high inventory as on 31st December, probably they would have realized the inventory gain maybe to the extent of half a dollar per barrel. But again, that looks very good, because again now it has to be read along with the crude throughput also. If they have been able to make crude throughput of above 17.6 million ton, because even crude throughput processing was seen lower in this quarter. If they are able to do beyond 17.6 million metric ton in this quarter, and if a company never gives the inventory gain separately, but if you take this 11.5, I think it's phenomenal, way beyond expectations of anybody, because that has not been the international trade. Light distillates were definitely seeing the high premium or high margin as against the middle and heavy distillates. But even taking that into account, $11.5 GRM looks very good. But again, question comes in that if you have $11.5 per barrel as GRM, then your EBIT from refining should have been higher by maybe at least 300 crores and not 694 crores, which is showing a gain of 100
Exactly, yeah. Mr. Tulsian, the reason for that is that the throughput is actually 17.5 MMT. Prakash, your thoughts, first thoughts on the numbers. 17.5 MMT, $11.5 GRM, which clearly is a stunner.
Wow. Yeah, absolutely. So, we were wondering whether 11 will be the threshold, this thing. So I think...
I mean, a lot of people had 10.8 also.
So 10 point, the benchmark, Singapore benchmark was soft, and with the rupee appreciation. So even if you were to factor in some inventory gains, it can't be so significant. So there definitely seems to be the product mix that's come to their rescue. So on an operational basis, I think even petchem, that 3,400 odd crores which they've clocked, in the environment that we saw this during this quarter, it was fairly difficult competitive, because the demand side was very soft. So that's also definitely remarkable. I think it's the beat on profitability, Anuj, is more from the treasury side, so taxation, interest expense. So the non-operating elements have also kind of contributed much more significant. But I don't see any disappointment with anybody saying, it's peaked out. And with the new projects finally coming into picture in the full of calendar 17 and 18, it could only marginally improve on certain counts. So there's absolutely no disappointment.
Oh yes, we have Mukesh Ambani's quote as well, which is running. By the way, this would mean that the gap between Singapore GRM and Reliance's GRM is $5.1 per barrel, which really is historically high, clearly. And this, of course, is a record profit as well for Reliance, for annual profit of almost 30,000 crore. And this would be 8th consecutive quarter-on-quarter jump as far as the net profit is concerned. So, as Prakash said, yes, there are a couple of items like, below EBITDA items which are important, but these numbers you can't really fault. Devin Choksi is also with us. Devin, good afternoon. Your thoughts on these numbers? So, we have $11.5 GRM, which for me is clearly the standout performance, but I wanted your thoughts.
Yeah, Anuj, I think the GRM probably we were expecting to be, I think, upwards of $11, and I think it has largely come in that direction. Primarily, I think the Basra crude, I think, which they have been able to procure at a significantly discounted price. Second aspect about it is, I think, the rupee has also helped them in this particular quarter. On the other side, I think we have been seeing the cracks, I think, favorable to them. Except the jet fuel, I think most of the cracks have remained, I think, positive on a quarter-over-quarter basis and have, in fact, I think, given a significant amount of growth, including in gasoline. So this is the advantage of this particular versatile refinery that they are operating. And I heard you saying that $5.1 probably is the highest. I believe that I think we might see such kind of benchmarks continuing going forward. With the change in the feedstock coming in this financial year, you should be seeing easily an improvement in the GRMs of at least $1 per barrel going forward on a subsequent quarter basis. So certainly, I think these GRMs are here to stay as it looks like.
Okay, the other number which is important is, and this could lead to a bit of a positive uptick on stock tomorrow, is the Jio's subscription number. 72 million was the last reported number. Street was penciling in 90 to 100 million. That number is now 108.9 million subscribers at the end of March end. 108.9 million subscribers. That's the number that we have. Mr. Hussain, thoughts on that number?
Anuj, I think these are the excellent numbers. I don't think that anyone has even really talked of the 11 crore kind of subscribers, because everyone, if you have seen the optimist migration, which people have been expecting, was at about 70%. And at that time, it was expected that probably 10 crore has come as a free subscriber. So even if we get to see it 7 to 7.5 crore, it will be seen quite good. But if they have touched 10.89 crore subscribers, and I think you can take that ballpark as 11 crores, I think that is phenomenal. Nobody must have thought of these kind of numbers. Yeah.
Okay, well, so must say that these numbers actually look quite good, and there's reason for some optimism tomorrow, even though the stock has run up a lot already. Sudeep Anand is also with us from IDBI Capital. Sudeep, we've got all the numbers: $11.5 on GRM. We have 109 million subscribers for Reliance Jio. Your thoughts on how the stock moves from here?
Yeah, definitely. The refinery side, the company has surprised us positively. We were expecting slightly lower, around $10.4 per barrel of GRM, but they have delivered very strong GRM. On a petrochemical side, definitely slightly disappointment. We had anticipated around 36 billion rupees of profit, but still it is pretty. The overall your operating profit is pretty strong. So, and secondly, your Jio subscriber base of over 100 million is definitely one of the major positives for the company also. Okay, well,
they are talking about the fact that they have beaten Singapore GRM by a good $5.1. So Devin, stocks up what, 30% this month or this year rather. How much more from here on these numbers?
Okay, I think look at these particular facts and I think probably arrive at the numbers. On one side, you have got the refining business expanding by 1/3 capacity. This is happening in the second quarter of this financial year. We await the commentary. On the other side, the feedstock changing, I think, is also happening in this particular quarter. Maybe in the second quarter, I think we will be seeing the announcement coming in as to the margin that they have produced. So again, I think on one side, volume improvement. Second side, I think profitability improvement from core business of refining. Already, I think the petrochemical polymer productions has started reaching the rating capacity of around 28,000 metric tons. So that again is suggesting that the volume wise, I think they would be growing far bigger in this particular space. So core business itself is contributing significantly, which is translating to somewhere around, I think, 10 rupees price earning ratio from core business alone. Look at the Jio business and interpret this business a little bit more. 11 crore subscribers, I think the current tariff, I think it translates to somewhere around 41,000 crore worth of revenue. And somewhere around, I think before interest, depreciation, all amortizations, I think the profit could be somewhere around 17 to 18,000 crores. Now, if this number translates to 20 crore subscribers, which is most, I think, from the data business that this company is cultivating, my reading says that I think Jio alone would give you a valuation of somewhere around 600 rupees per share. Along with the retail business, I would think that I think it could easily add up to around 1 lakh crore worth of market cap if it is a separate business listed. So put together, I think somewhere around 1800 kind of a price range for Reliance Industry is distinctly seen. Whether it happens now or 6 months down the line, I think one will have to field. But I guess I think it should happen as far as I think the valuation goes.
Okay, 1800 price target, 1200 for traditional business and 600 for telecom. Mr. Tulsian, this petchem performance, they're talking about some softening in prices, PVC and a couple of others. But do you think the market will absorb that?
Anuj, I think that has to do because if you really see this, all petchem prices are always import parity prices, and because of the, as I've said, that because of the strengthening rupee, you have seen that. But I see honestly the very robust demand, and actually that is seen getting reflected also. I have not seen the press release because we have been estimating petchem volume. If you can tell me the petchem volume, we have been estimating that to be at 6.45 million metric ton for this quarter, and actually even if there is soft margin, because of this strengthening rupee, probably that will get offset by the increased capacity, because we have seen huge capacity additions having taken place in petchem. You have not seen any capacity addition happening for the company in any of the segments, whether it is a smaller one, whether it is upstream or in the refinery, but in petchem they have been going in a very aggressive way. So I won't be, because we have seen the EBIT margin at 13%, which otherwise was expected it to be at 14.5% to 15%. So even if there is drop of about 150 basis point on the expectations on the EBIT margin, I don't think that market should really have complaint as long as it gets compensated with the higher volume.
Okay, well, I'm still looking for that number, Mr. Tulsian. I've not been able to find that number on petchem, but I'll find that in a bit. But Sudeep Bandyopadhyay is also with us. Sudeep, good evening. So it looks like it's a beat on most parameters. Clearly, GRM and this Reliance Jio number standing out, which really have been the big triggers for the company. Do you think the stock has legs to go even after the 30% rally?
I think so, Anuj. I think the result which they have come up with on both on GRM as well as looks like on the petchem side, core businesses which produce about 2/3 and 1/3 of their respective profits, they've done very, very well. Nobody expected 11 plus dollar of GRM, so 11.5 is definitely great. Also remember the Jio numbers which they have come up with was actually beyond expectations. So I think if they can convert at least 50% of the numbers into a paying customers from the next quarter onwards, I think that itself will take Reliance to a different level. There is a little bit of disappointment on both the exploration piece and the retail. But having said that, I think from here on, at least 10% upside I do see in Reliance within the next 6 months.
Within the next 6 months. Prakash, your thoughts on what could be the fair value of the stock? Because 1200, 1250 is assumed as the fair value for the traditional business. So based on these numbers, where do you see the stock moving?
So it's on a trailing basis that 1250, 1260 sounds fairly good as a price. Secondly, you need to see it in the perspective that the stock is kind of playing catch up for the last about 7-8 years, that it hasn't kind of delivered on a CAGR basis. So there is no arithmetic that says that it has to be in a linear progression. It could be a geometric progression in terms of growth, the price discovery. And the current business, the traditional business, core business could also get valued at about, my sense is at about 1450 to 1500, which is what it is currently close to. You are getting the Jio business for free. In the current price. So, now it depends on whether you want to give the Jio business 2 years or 1 year and pencil that in. As Devin was explaining, a back of the envelope calculation anywhere between 500 to 600, 650. Remember Mr. Ambani's words that when he said we will have margins, profitability margins in the mid-teens from the Jio business in some time. And if that happens, we are talking about, a dramatic change in the company's revenue stream, which brings down a lot of other costs as well, which have been burdening the company on the interest side. So my sense is 2000 is what I would look at as the next threshold. Anything about 2000 is where you would need to reevaluate in terms of whether you want to book profits or whatever. But from 1400 to 2000, I don't see the trajectory to be interrupted by anything very major.
Okay, 2000 would be what, 40% jump from here. Now, keep in mind the previous all-time high for Reliance has been what, 1600 in 2008.
Yes.
So in 9 years, the stock has gone nowhere actually. Yes, it's rallied over the last 3 months about 30-35%. Mr. Tulsian, the petchem number that you were looking at, 6.2 MMT.
No, I was looking at 6.45 MMT.
No, I'm saying that the number is 6.2.
Okay. So I think that, Anuj, this is the actually the cause of disappointment, because I have estimated Petchem EBIT margin at 3690 crore on 6.45 MMT.
Okay.
So I won't be disappointed to see the EBIT of 3441 on the lower volume of 6.2, which you have said just now.
Yes.
Because actually there has been robust demand of this Petchem, polymer and polyester both in this quarter, and probably that may. But on their overseas, they are very what you call active in the overseas market, also on the polymer and polyester. And when you talk to the overseas buyer, maybe like in Nigeria and all that, they have been saying that they are getting the cheaper petchem, the polymer in Nigeria than what the company sells in this one. So maybe it a mix of overseas and domestic market probably has seen the lower offtake, and maybe but the margin is seen maintained on the absolute number. Yeah.
Okay, so for our viewers who are joining late, let me just recap what we have discussed so far. Reliance's Q4 numbers are clearly a beat on expectations. The two numbers that really stand out, one is the gross refining margin, which is $11.5. The expectation was $11. The most bullish expectation was not even close to $11.5. And of course, the Geo number is 109 million subscribers. There's slight marginal disappointment as far as the petchem business is concerned, but refining is quite okay with $11.5 GRM. They've been able to report segment EBIT of close to 6,300 crores. There's also, the taxation which has come down, but all in all, the verdict from our guess is that this is a stock which should, this is a number which should lead to some kind of re-rating on the stock. So let's take final thoughts. Mr. Tulsian, let me start with you. Tomorrow morning, what kind of verdict does the street give to Reliance numbers?
So, looking to the momentum which we have been seeing in the stock, people will definitely be taking these two or three things. In fact, you have said that petchem is a big disappointment, but I don't agree. In fact, I have satisfaction from all three core operations, that is petchem, refining, and as well as a Reliance Jio subscriber. So obviously, I'm keeping a positive view. Earlier, I've been giving a price target of 1350 to 1400, but probably market should receive well these results, and maybe an upside of about 50 rupees can be expected, largely because of the technical factor till expiry, maybe in the next 3 days, because people are short in the counter as well. So some kind of short covering and the informed buying, and the people, those who have been holding the long positions, will see that expiry happens on a positive note.
Okay, the recent high has been 1448. Suffice to say that would be cleaned out first thing in the morning. But what next from there? Prakash, your thoughts? We are talking about tomorrow's reaction, of course.
Yeah, absolutely. Yeah. So my target was, of course,
exactly.
more long term. So
Yes.
I fully agree. The stock has had this feeling of saying it's overbought. It's overdone. The upside has been too rapid. But these numbers will give that validation for whoever has bought into it, even at, let's say, about 1300 to 1400 band. So nobody's going to book profits. You will probably see a new wave of buying that will emerge post probably the expiry. I think the expiry is going to be a big trigger, a big milestone of sorts for which people would want to wait out because of the huge futures position. But post that, and in the next few days, I would see it's a lot of genuine buying which would come into the stock, which will probably in the next week or so take it to the 1500 plus mark as well.
Okay, so that's of course something we're talking about near term. Deven, your thoughts on what kind of reaction the market gives tomorrow?
Well, Anuj, I think I've been maintaining that I think this is 3 years of bull phase which has started for Reliance, and probably having seen all the capex programs completed in refining business, in petrochemical polymer businesses, also largely the capex program completing in the Geo business and I think retail business. All of these verticals are expected to produce some sizable amount of revenue, profits. As I see it, the core business is still valued at around 10 price multiple, which according to me holds a clear chance of re-rating because of the 1/3 improvement in the profit performance itself, which is seen on the cards. And other two businesses, I think, which have not started reflecting into the price could also reflect big time. Now, if the long-only investors come into the market, I think they may probably take the position, and in the short term also the stock price could perform. But if you are holding 2 years or 2.5 year view from now, I see a possibility of more than double the stock price from current levels.
Okay, Mr. Tulsian, I just wanted one more word from you on the cash situation. Cash and cash equivalent at $11.9 billion and outstanding debt at $30.3 billion. Any thoughts on that as well?
See, Anuj, that's a little cause of worry, because actually if you see 1,96,600 crore, I'm converting that into Indian rupee, is the debt, and cash and cash equivalent is 77,226. So you have about 1,25,000 crore as the or maybe 1,20,000 crore if I go exactly. So it's very difficult to take a call on what will be the amount having spent on the Reliance Jio, which I'm estimating ballpark at about 2,06,000 crore, and that will really be deciding the trend. Market has been very positive on Reliance Jio, but actually I'm keeping my a little cautious view, because if I take the Reliance Jio revenue at 46,000 crore for FY18 and give EBITDA margin of 33%, that translates to 15,000 crore, and you knock off interest of 6,000 crore and depreciation of 14,000 crore, your PBT will be negative in this one. So I won't be going too gung-ho. Definitely the addition of subscribers is really seen positive, but that has to get reflected. Probably market will start expecting that after 1 or 2 quarters. So maybe FY18 on the net basis there may be little disappointment. It can maybe on a PBT level it can show, because I don't expect that EBITDA margin of more than 33% can really be expected by the company and in any circumstances. So coming specifically on a question of cash and cash equivalent and debt, actually company has been gradually moving in the higher trajectory of debt, but let's hope that the capex will stop from 1st April 2018 practically on all the projects, because they have been very aggressive in petchem additions also. And if the normal, because they have spent about 1,14,742 crore as capex in FY17, and I'm expecting that to fall to a level of about maybe 30,000 crore. So if you have a cash flow of about maybe 30,000 crore every year, probably that can ease the situation, not going beyond 1,20,000 crore on a net debt basis, which definitely looks alarming at this point of time. Yeah.
Fair enough. Gentlemen, thanks a lot for joining me today in analyzing Reliance's numbers. And let me give the mandatory disclaimer as well. Reliance Industries owns TV 18 and Network 18, the companies that operate the channel CNBC TV 18. But the verdict from our experts is unanimous. These numbers should lead to rally in the stock, despite the 30% rally that we've already seen this year. And looks like tomorrow itself we are set for new 52-week high on Reliance Industries. Thanks a lot for watching. Of course, news continues on CNBC TV 18.